Hello and welcome. I am Siinom. Welcome to ElliottWaveSpot. Today I'm going to take you through probably one of the most well overrated processes within the wave principle. That is the process of breaking down or doing what we call a breakdown wave count. So in front of us, we're looking at a chart of the US 30 or DJIA, that is the Dow Jones Industrial Averages from the quarterly time frame, as you can see here. So I'm using a free version of the platform TradingView today. So if you look here, most of the time, what I first prefer to do is switch to the line chart, which is what you're seeing right now. So the data goes back all the way to about 1970, January 1970. Yeah. So within the wave principle, we know that we have five core Elliott wave patterns, which is the impulse, the diagonals, the zigzag, the flat, and a triangle. Now, when the three corrective patterns are combined, they form what we call combinations. So, corrective being a flat, zigzag, and a triangle. Now, there are rules as well pertaining to combinations, which we use in order to classify, whether a pattern is like sideways or sharp combination. And on top of that, we know that within a combination, we can only have one zigzag within wave W or wave Y or wave Z. We cannot have two, not unless it's a sharp correction, which would now know as maybe say double zigzag or triple zigzag. But within a sideways combination, we can only have one zigzag within wave W or wave Y or wave Z, and also one triangle. But also know that a triangle is always going to be the last wave, not unless it's found within wave X within a sideways combination. However, there's no limit to the number of flats we can have. So going back to this chart from 1975 right there. The first question that Jeffrey Kennedy would always say you must ask yourself when you're looking at a chart is, do I see a pattern I recognize? Now, I'm used to the line chart. Now, most of you probably won't see anything. Well, maybe you will, given that there is a possible impulse, with each and every one of your eyes. So, if you're looking at it with your own eyes, probably you are going to see that, well, we do have an impulse. Now, can you count the impulse? Probably not for you within a line chart, but for me, yes. So let's switch back to the bars. Now, I want to also note something here. If you look here, the line chart was too clean and it didn't have much data. And you look here, these are the bars. There's a lot of data that you can see. Look at the candlestick, a lot of noise, black and white, it's just too much for you to actually perform a wave count. So I highly don't recommend that someone should use, Japanese candlesticks when doing wave count. Bars are preferred, which is why the guys from Elliott Wave International use the bars. So if you look here, the first thing Jeffrey again would say, ask yourself is, do I see a pattern I recognize? Well, now this question, you ask yourself looking at two things. One, the entire price action or data that is from here to there. For me, yes, I do see a pattern I recognize. But in the case whereby you cannot recognize the entire pattern, you look at a certain portion of the data. Do you see a pattern you recognize? If yes, then you have a possible count. And if you want to trade a possible setup, but if it's in the case whereby you have like no pattern you recognize, move to the next chart. So for me, now I've asked the question that I know indeed and see a pattern I recognize here. The first question though that I would ask one of my students, I would say is, first, is this the lowest low or the highest high? Do you see it? Can you spot it? Well, for me, that's the first thing that I want to do. Go for the lowest low. And then if I can spot it, I can see there's the highest high so far, there's the lowest low. And then after that, is this data complete? Now, these questions are coming from me. Is this data complete? Well, The impulse is surely complete based, on what I'm seeing here, but this is not the entire data. So, which means the current data from this low to that high is complete for me to count it as an impulse, because there are charts that I can show you. Let me just take you quickly to the chart of this guy right here. No, I'm not. I think it's the IBEX 35. I think it's the IBEX 35. So if you're looking at the IBEX 35, this data is definitely not complete. You can see here you have 3, 4, 5, and then WXY. So if I did not ask myself the question that says, is this data complete? Probably I would have started counting here 1, 2, 3, 4, 5, and then probably I would be wrong, because now if I said 1, 2, 3, 4, 5, chances are I would be forced to say this is a 1, 2, and then now I'm looking at this index at a totally completely different perspective. So going back to the US 30, let's go back to quarterly. So you can see that this data, well, allows me to count it as a complete impulse wave. So let's first mark the lowest low here. So there is our lowest low right there. So let me just highlight it for you. There is our lowest low. And then the higher side is no need for us to complete it, because to highlight it, because I don't think it's a complete pattern. So sorry about that. So this is the beginning of an impulse. One, okay, for 5. Now can we count this as 1 right here from this low? 1, 2, of course not. This is corrective. So I would rather say that's our wave 2 right there. And then let's put this aside. Now going back to the guideline of the right look. Most of you would say 1, 2, 3, 4, 5, but you would be wrong for 2 reasons. One, the guideline of the right look was ignored if you say this is your 3, 4. Secondly, the internal wave count right here would prove you wrong. So if you look here, which correction do you think would say it's almost of the same size or is suitable to be the wave 4 of like this wave 2? Well, for me, I would say it's this guy right here. Now let's go back. We have our wave 4. Now, where did we pick? We could say we picked here. But if you switch to the line chart, 1, 2, 3, I wouldn't say that's 4 here and then 5. I would be wrong, because again, the guideline of right look would be ignored. So I would rather say maybe this is a flat pattern right here. And it would align well, given that this was a 2008 crash, because again, as we know, most of the time a crash will often occur as a flat wave C of a flat pattern. So I would say that is our peak, right? So you want to avoid patterns like truncations here within the wave principle, because again, those are unicorns, as Jeffrey would call them, because they are rare. Now let us switch to the monthly time frame. What am I going to do next? I want to go and confirm if this is indeed the correct way of looking at the market. Well, let's look at it here. From this low, you have 1, 2, 3, 4 right here, I believe. And then I think you have your 5 right here. I don't want to say, let me show you right here. I think you can clearly see here, this is a bit more sideways. And if you said now this is 1, 2, 3, 4, 5, you would have like one wave which is remaining and doesn't have anywhere to fit. So I think it's safe to just say this is rather a flat pattern. So let's switch the wave degrees. Now the wave degrees within the wave principle are not the most important thing to understand, because again, you don't need to know them in order to make money. All you need to be able to do is to be like able to simple to be able to count waves, and again, that's your wave. So that's your 3, 4. I don't think that's 5 waves right there. Now let us go back here from this low. Okay, that's the lowest low so far. That's something I want you to note here within this count. So you have 1 right here, 2, because again, we had a new low after this, so we cannot count it as we cannot count it as, let's say 1 2, because it's a violation of the rule that says wave 2 cannot retrace more than 100% of wave 1. So 1 2, but if you say that's the end of wave 1, then that means we have wave 3 waves. So I would rather consider a truncation maybe at this point or at that point there. So again, a truncation there, and then what do we have here? A decline right here. Now, what if we consider a zigzag in this case? Well, we would be wrong, because this bar right here took out this high. Again, we know that wave B of a zigzag cannot retrace the entire wave A, you see. So I think this is wave A of a flat, and then we have wave B as a flat itself, and then we have wave C right here with a slight, I would say, truncation, because I don't think it took out the low. So it's a truncated regular flat. So let's go and label it. So you're unlucky, you guys, because every time I try to make a video, maybe in the middle of it, you'll find that there's someone who's just going to show up and talk. So you have your 1 and then 2 right now. Now, can you count 5 waves from here, right? This low. Again, let's highlight it so that it's easier for you to see. This low of 770, I mean 776 right there. Well, I would say that's a clear starting point for the third wave. Now we have wave 1 right there. So I said to you, you want to avoid the unicorn. A unicorn being an expanding diagonal. You have a truncation. It's a unicorn. You're always taking a risk whenever you're going for a unicorn. So because this, price action has already played out, it's a bit safer, because again, you won't have to trade this move. But in the long term, it might not be, but for now it is. So that's 1, it's clear, and it's 2 right there. Now we're looking for the third wave. Let's switch wave degree. Why are we switching? Because we are within wave 3 of this degree right here. So the subdivision should be 1 degree low. So we have 1 2. Now if you are looking here, you can be able to count 5 waves till you go up here. And if you look at this correction, it sort of fits the narrative of this wave to that, you know what, hey, the right look or the guideline of the right look is well suited here, or maybe this correction or decline, the 1987 crash, does align, in terms of proportionality with what we know as wave 2 of the of the primary degree. I mean, yes, of the intermediate degree, not the primary. So I would say that's 3 right there. And 4. Most of the crashes are often found in wave 4 based on experience within the wave principle. 1 2 3 4. And then we had this prolonged, move to the upside. Now, I would say here you have a starting point again. 1 2. Why did I say that? Let me first switch the wave degree, down to minor degree. So from this low, you can clearly see the subdivisions are of the same size, almost of the same size. And you can see this is like, 5 waves to the upside, 1 2 3 4 5. And you can see your wave 4 here is depicted as a possible flat pattern. And you can see the subdivisions here of a possible extending third wave. So I think this is this is 1 2, and then I would say possibly 1. Okay, let me look for your fourth wave right here. If you look here, you have your 1 2 1 2 3 4 5. Let's go back and confirm it. So I would definitely say about here, because you have 1 2 3 4 5. I would definitely say about there we had our third wave, and then we had our fourth wave there, and then we had our fifth wave at the top, right about there. Now again, I didn't go to lower time frames to actually confirm this. You do need to go to lower time frames, because again, they could prove you wrong, but I was just trying to show you how you can actually break down, using the wave principle. Why am I saying this is a possible wave 4 right here? Well, there's a couple of factors I put into consideration. One being the size of this decline, and you compare it with the size of this one. It would make sense because there is not a single correction from here, from this low going up, that is almost of the same size as this wave 2 decline right here. So I think that's the most justifiable way of saying, hey, but this might be what you want. So I think we have your 3 ABC4. Now let's count from this low right here. Well, we are going to run out of time because my videos, I like them to be short. So let's mark this low right here. So we all know that currently we are in an uptrend. Let's mark that point right there. We are in an uptrend, and we know that in 2020 we had a crash. And again, based on my wave count, I am seeing, like my experience with the wave principle, I am seeing here the beginning of a flat A, B, C. So I would count that part right there as a wave 4, no matter what happens right here. So let me place my starting point here, 1, 2, and then that's our wave 3, that's our wave 4. So our wave 5, we don't know where exactly. Now let us go back here. If you check here, I think we have one, see, 1, 2, 3, 4, 5. 1, 2, and then we had 1, 2 because there's an overlap. It cannot be wave 3, and this part is shorter than this one. At the same time, it's shorter than any move after it. So I would say that's 1, 2, 1, 2. So now let's do a wave extension, possible wave count here. 1, 2, and then now which degree is currently unfolding after this one, because we're in wave 5 now of this degree. So I would say we are in intermediate degree. So let's go and change the color to blue. Let's place it right there, the right way. 1, 2, and then we have 1, 2. So I would say this is where this guy fits right here. 1, 2, 1, 2. And then if you can count all the way now, looking at the possible, corrections here, I would say that's 1, 2, and then you have 1, 2, perhaps 3, 4, and an extended fifth, or yeah, something like that. 1, 2. Let me just check it on the line chart. You have 1, 2, 1, 2, and then 3, 4, and then you have an extended fifth right there, and then you have a 1, 2, and then 3, 4, and then your 5. So it would make more sense to say this is 1. Let me just highlight it for you. 1, 2, and then you have your 3, and then you have your 4, and you have your 5 right there. It would make more sense to count like that. Or if not, you can even count like that. Maybe if you have a triangle right there, and it would be more suitable to say this is a 1, 2, 3, 4, 5. So again, I am considering this count as the primary wave count. So if we have 1, 2, 3, 4, 5, it means we're missing a spot for number 5 right there. So I would say that's our third wave right there. And if we already have a correction, which was like the Greg Secker era right there, I would say this is the right wave count at the moment. I would say we have 1, 2, and then subwave 1, 2, 3, 4, 5. Let's just go and double check this part. Okay, that's 3 waves. It's not a 5, because again, I was looking to say maybe this is A, B, C of a flat, but the line chart is proving to me that this is a correction. A, B, C, a zigzag, and this is not an impulse, but this is clearly an impulse. So it's good to say that we have 1, 2, 3, 4, and then 5. And now we have a possible extending fifth wave, because based on my experience, I have seen a lot of fifth waves extend on indexes. So I think we had 1, 2, 3, 4, 5. Let me just highlight it for you. I think we have something like this here. 1, 2, 3, 4, 5. Of which degree? Of minor degree. So this super cycle is indeed coming to an end. Grand super cycle rather. Let me just go and check it for you. Yeah, 1, 2, 3, 4, 5, and we have a correction which it's saying is a zigzag here. Now because I'm out of time, we should continue to push higher here in indexes for the third wave, and then the fourth, and then to complete what our fifth wave right there. Well, ladies and gentlemen, that does it for Siinom today. Have a good one.